Hi, let's talk about Sequential Brands Group. It's a company together with its subsidiaries owns various consumer brands in the active and lifestyle categories. The market cap of the company is 18 million, which based on simple Wall Street is not meaningful. It has highly volatile share price and earnings have declined by 24% per year over the past 5 years, and fund information should not consider as investment advice. So as usually, this stock pretty much was pumped in early period, and it's currently down from its peak. So let's have a look. So they had 22nd of March $36.26, and after a few months, minus 62, and it's currently this trading day up to 40%. And let's have a look. Is there any potential to grow to the same numbers as we saw in March? There was some of the legal issues, earnings updates that made stock a little bit to the downtrend, as you can see here. So it went from its peak around $40 to 25 in first of numbers in May, and drop even more. But we see from the other videos that I'm researching that many of stocks currently are dropping to the same level that they were in last year. So I think currently there's many buy opportunities on those stocks which made they peaks in the like mid-February. For example, biotech made almost every stock in biotech did in mid-February they peak in like 3 years range, and currently they're down at the same point as they were last year. So that's what I mean by highly volatile share price. And let's continue. Market performance, 1 year turn, like less than minus 1%. Of course, not beating the industry, neither the market. 5-year returns, you can see in 5 years you could lose all your capital, minus 96. So that could be hurting, but never put all your money in one stock. Long-term price volatility considers highest, and by the way, the industry is more volatile than the average market volatility. Valuation side. So currently, based on simple Wall Street, we see here that fair valuation should be around $4 per share. Let's have a look. So usually we see only 6 month, 1 year screen. So simple Wall Street shows that the stock price could be reasonable valuated at the same number that it was last year. So $4 we see here in September, but we don't see usually the 5-year frame or max. So we see here that the stock were at its peak $3,330, and they probably made some splits, reverse splits, and so on. But anyway, TipRanks has no price targets. Unfortunately, the Market Watch has the average of, I think this is more accurate, stock price target on the Market Watch, $12 per share. So it did drop to, what's the lowest point, 909, and we see here that the volumes are increased very much. So I think there's a resistance. If the stock price go less than 10, there's a lot of buyers to buy the price. But future growth, unfortunately, here we see forecasted on the industry that they are working in, consumer durables, and 21%. Past performance, companies' historical annual earning growth decreased by 24%, and the company is currently unprofitable. The financial health says that, yeah, they do have a lot of a debt to equity ratio, 633%, which is very high, and as you can see, the equity level is decreasing, fortunately same as the debt level, but the cash level that they do is not covering the debt. So if the interest rates go up, they could possibly have some of the problems with the payments. And there's two options, of course. They could print the shares outstanding more, so we can see here even that they pull out the shares, maybe for some financial reasons, exponential reasons, and so on. But this is one thing that every investor should be aware of. As you can see, balance sheet pretty red on the liability side. They are not paying dividends, and ownership, yes, so there's a companies that have been selling this stock last year's May, so almost 1 year ago. Ownership breakdown, so mostly general public holding 48%, insiders 18%, private companies 18%, and institutions 14%. So top shareholders, you see Vanguard has increased. Yeah, unfortunately, last reporting holding date not so fresh. This is actually 31st of March. Singular Gulf and Company decreased by not so much, less than 2%. But there's on the both side, and yeah, George Capital Management added 223%. The price were at the time when the last reporting holding date was 14, around the same numbers, but there's no information did they sell with this profit in March, unfortunately. But yeah, as we can see, long term it's uptrend, short term it's downtrending. So this could be volatile, this could go up even to 20, 25, or maybe at a 40. It could mean that tripling, then it might go down. But I recommend highly to invest long term and not more than 1% of your whole portfolio. So if you have portfolio of 10,000, for experimental reasons, don't invest in any stock more than $1,000. Keep researching. Simple safe dividend shows that shares outstanding increasing, as I said, and sales are decreasing. And investing.com summary the stock for long-term investors as a strong sell by moving average. Yes, it's summarizing as a sell by moving average as a strong sell. Technical indicators neutral. So I'm guessing this could be short term. Yeah, that's why I said the short term. So there's a 30-minute frame of hourly frame in technical indicators showing strong buy. Anyway, thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.